On today's hot sheet, I'm discussing the recent housing inventory growth's downside for builders, this year's $56 billion surge in international buyers, and the weekly unemployment report. Today is Thursday, July 17, 2025. I am Byron Lazine. The hot sheet starts now. Live from Connecticut, back indoors. Look, Haley, it feels good to be in the AC. Outside yesterday for the BAM BBQ. Thank you to all of those that attended the BBQ. It was a great event. Shout out to the speakers. Shout out to all of you guys who were able to show up. BAM BBQ. If you're a BAMX member, obviously you've got the replays up in school. BAMX members replay is up. If you missed something, you were in and out. There was thousands that were in and out over the course of the event. So if you missed some of it, you can always check out the replay in school. BAMX members, you know where to find that. But thank you to everybody who attended another great virtual event, third of the year. BAMmies will be coming up at the end of the year, our award show. And we've got our only in-person event, of course, in Scottsdale. Some of you guys grabbed tickets yesterday. There's only one VIP ticket. I don't know if it's sold out already, but there's only one VIP ticket left as of yesterday. I could be completely lying to you. It could be gone. There's a handful of mid-tier, and then there's some general admission. Bamcamp.live. If you want to come to Scottsdale, September 24th. Okay. Housing inventory growth. This is something that's really good for buyers. I mean, there's not a lot of room here for affordability as we just continue to kind of slug and chug along on the interest rate story. The interest rates continue to hover around 7. We're, a tick below 7%. Anytime we inch towards 7 or there's a 7 in front, the market feels it. You can feel it too. It impacts speed. It impacts how many buyers are out there looking at properties. And as inventory goes up, natural for the time of the year, properties sit on the market longer. It's not April anymore. Seller, I think it's a great time to sell in July. Well, not if you're comparing to April. If you're comparing to December, sure. But the truth of the matter is the best time is behind us for the year, and the slower times are ahead of us in terms of selling. This is good news for buyers. They've got more options. Okay. When you've got more options, when you've got things sitting on the market longer, that's where you get downward pressure on price. Price is moving sideways. Of course, a lot of the reports, Zillow included, have said, yeah, we just don't think home price appreciation is going to be as high as we once thought. Logan Motoshami has it at 1.7% moving up. Factor in inflation, that's basically negative home price growth. It's been really good for buyers, this home inventory growth. But for builders, not so much. Okay. In fact, Housing Wire says it's been detrimental to home builders this year. Okay. And there's a Mark Zandi Analytics, some interesting comments from Mark about what this might mean for the future of the housing market. Okay. What are the signals? What builders are going through right now? What does this mean for even the greater economy? He's got some really interesting comments we're going to get to. We'll take a look at the NHAB Wells Fargo National Home Index here, the components for June. Okay, so this is builder confidence. Look where it's at. Okay, it's not doing well. Okay, for the next 6 months, how do they feel? Lowest they felt in 5 years, nearly, except for when the interest rates exploded. Okay. Present sales, low point in the last 5 years. Traffic of prospective buyers, low point in the last 5 years. So all the measurables for builders are down. They don't have a great forward-looking mindset on the inventory. Remember, new builds up over 9 months of inventory. That's a huge swing buyer advantage. New houses for sale by stage of construction completed. That number's ticking down. Obviously, we've seen that number move up as builders have capitalized in what is believed to be a very, low inventory, home. We're so many homes short to meet demand. No, we're so many affordable homes short to meet demand, but built to meet that perceived demand, and now it's dipping. Why? It doesn't make sense to complete homes. It makes more sense for a builder right now, this stage of the game, to actually delay projects. Here's the big indicator. This is the one that everybody looks at when trying to factor in, is a recession coming? Look at the last 4 recessions. This number shot down. Or really, if you take this COVID one out, and you look at the last 3 recessions before that, this residential building construction employee number moves down before we hit recession. Okay. 90s, moving down, recession. Early 2000s, moving down, recession. Great financial crisis, moving down, recession follows. So this hasn't started moving down. It's just gotten very bumpy. Okay. It's like, it's not shooting up. It's not moving down, but it's starting to get bumpy. That's where we're at on residential building construction. You see rates go to 6. I think that story changes. Okay. Things can change in a hurry when you get rates to move down. I mean, 23 weeks straight, year over year, on positive mortgage application. People want to buy homes, want to be able to afford them, need to be able to afford them to be a buyer. Single family construction for May, single family permits down, single family starts flat, under construction down, moving down, completions up month over month. If you're already in the middle of the project, you got to get it done and get that home, obviously, onto the market. Okay. So there you go on builders. Here's what I was talking about with the mortgage applications. I mean, look at this. This is a future indicator that, yeah, we get rates to move down. We're going to have some buyers out there. That'd be great for builders. Builders agree with the FHFA director, Bill Pulte. Like, Powell, you got to cut. I don't think National Association of Home Builders will take it as far as Bill and say, Powell, you have to resign. But they're advocates of a cut. Don't count on it. It's not coming in a couple of weeks. If that cut does come and you get rates down closer to 6, you could expect this number to go up. It helps everybody, existing home sales. It'll help stabilize prices where there's downward pressure, obviously. And it'll certainly help builders. Okay, Mark Zandi's comments here. Mark Zandi says, and he said this on not on IG. He said this on X. They got picked up by a few different news outlets. Mark Zandi Analytics. He can be a little bit of an extremist. I said it yesterday, like some of these analysts get into some of the partisan stuff, don't love it. But Zandi's somebody who's been around the block and gets quoted all the time. Here's his tweet. I sent off a yellow flare on the housing market in a post a couple of weeks ago. So a couple of weeks ago, Mark Zandi, long tenured analyst, says, hey, I'm putting out a cautionary flare on the housing market. That's just a couple of weeks ago. But now, and he gets 203,000 views on this. Now he's thinking a red flare is more appropriate. Remember, just a few weeks ago, a couple weeks ago, we were closer to those days. We were at 6.6 on the 30-year fixed. The big, beautiful bill goes through, and then all of the tariff negotiations pop back up. What happens then? 10-year moves up, 10 years at 30-day high, 30-year fixed moves up. That's the last couple weeks. And now Mark Zandi is shooting the red flare into the sky. It's not a firework to celebrate Bam Barbecue. It is a warning sign. Red flashing warning sign from Mark Zandi. On the housing market, home sales, home building, and even house prices are set to slump unless mortgage rates decline materially from their current near 7%. That, however, seems unlikely. Okay, this is what Zandi goes on to say. Home sales are already uber depressed. They've been for 3 years, Mark. Okay, this isn't. I love it when I keep seeing this headline. Home sales are so depressed. It's been the same for 3 years. Those of us in it know home sales have been in a recession for 3+ years. Okay, we know this. Don't act like you're breaking news by saying that. And I'm not saying market, I'm just saying you're seeing headlines that are acting like the depression of home sales. Wow, existing home sales trending so low, 4 million. It's a headline. It's a 3-year-old headline. We've been living in this. Home sales are already uber depressed, but home builders providing rate buy downs had been propping up sales. So this part is true, right? Home builders had some leverage. They're running out of room on their buy downs. They're running out of room on their negotiations with buyers. Their traffic is down. They don't have as many buyers. Builders are giving up, Zandi says in the tweet. It's simply too expensive. They're cutting too deep into these margins is essentially what's happening. Goes on to say a big tell is that many builders are delaying their land purchases from the land banks. New home sales, starts, and completions will soon fall. Okay. Fall even further. I agree with this. I think I said this months ago. You're going to see starts fall. You're going to see builders saying, I'm just not going to start until I have more certainty that there's going to be more buyers. I don't want a model home sitting around and having somebody play Tetris on their cell phone as the sales rep in there. Okay. I don't want to build a model home for that. Home price growth had held up well, but this too is changing as. Do people still play Tetris, Haley? Yeah. Are you playing Tetris over there? No. You texting, but what do you got going on? No Tetris. Wordle? Wordle's the big thing? Wordle's the thing. House price growth had held up well, but this too is changing as prices have gone sideways and are set to fall. 7% is hammering demand. There are more listings given their demographic and job situation, locked in homeowners, blah, blah, blah. They can only work around these needs for so long. Housing, here's the punchline from Zandi. Housing will thus soon be a full-blown headwind to broader economic growth. Full-blown headwind to broader economic growth, adding to the growing list of reasons to be worried about the economy's prospects later this year and early next. If that's true, that's a major problem. Remember, why does current administration, Bill Pulte, FHFA director, want lower rates? They know there's a broader economic positive impact. More existing home sales go from 4 million to 5 million. What does that do for a lot of small businesses? A lot of support around the ecosystem of real estate. Loan officers, appraisers, inspectors, handyman companies, moving companies, power washing companies, cleaning companies, plumbers, electricians, landscapers. There's a huge impact on all the supporting trades when real estate deals move up. If they're going to continue to be suppressed and now builders, the big impact builders have to lay off. If they have to lay off, if they stop, if prices do move down the way Zandi's talking about them moving down, that creates a broader economic negative impact. And it's one the administration is really pushing hard against, right? It's why you saw the back and forth yesterday between President Trump and Powell. Okay. What happens if Trump fires Fed Chair Powell? Well, there's an analyst that told CNBC this would be a mess. Well, remember, don't listen to all the analysts. A lot of them are partisan. A lot of them just want to put out their political talking points, because what happened with the market yesterday? The market didn't care if it's Powell or somebody else. Okay. What did the market say? Put any puppet in the Fed. We're not blinking an eye. Go check out the Dow. Okay. But you're gonna see a whole bunch of, we expect, as everyone else does. As everyone else, I don't know. Did you watch the Dow yesterday? We expect, as everyone else does, that it would be significantly negative for markets, likely driving both an equity sell-off and a counterproductive spike in long-term yields. Tobin Marcus wrote in a note to clients here. Wolf's research. Wolf speculated that the Supreme Court could ultimately decide whether Trump has the power to fire Powell. The firm issued the analysis just hours after Powell's tenure as head of the central bank looked extremely shaky, and then obviously seemed like those comments backed off. Here's the story yesterday, if you missed it. Supposedly Trump had told a group of Republican members of Congress the night before that he likely will fire Powell soon. Of course, there's many that believe that actually can't happen. They're certainly pressuring Powell in a bunch of different ways. I guess there's that $2.5 billion renovation that Bill Pulte and others have claimed was way overboard, that Powell would have had to approve. You know what was interesting? Powell said about the $2.5 billion renovation for the Federal Reserve's headquarters. This isn't the taxpayers' money. The Federal Reserve makes this money. No, all the money's the taxpayer money. I didn't understand that. As if the Federal Reserve is like their own nation or something. Okay, you're borrowing from our future, so that it's our money. Even if you're printing it, it's ours. We have to pay it back. Okay, international home buyers, they're paying the price to be a home owner in the U.S. International buyers purchased $56 billion worth of U.S. homes from April 24 to March 25, to 33.2% increase year over year. Okay, another reason, dig deeper than the headlines. The headlines will tell you every foreign person coming into the U.S. is being escorted out. Well, I don't know. The data tells us different. Existing home purchased by foreign buyers, $56 billion, up 33%. 78,100 total purchases, up 44% from 54,300. Median price is about $500,000. It's a record high for international buyers, up 4.1%. Top 5 countries: China, Canada, Mexico, India, and the UK. The top 5 destinations: Florida, California, Texas, New York, Arizona. And here's the thing. A lot of people are going to say, well, there's just, we've lost all of our international demand. People don't want to come to, America anymore because of the political climate. Not according to the numbers. I mean, they didn't want to come apparently in 21, 22, 23, and 24. Now they want to come at a higher scale than they did in the previous year. International buyers. Number of existing home purchases by foreign buyers, it's up. Why was it so far down in 22, 23, 24? Okay. Why? Well, you obviously were coming out of COVID in 21, and then we inflated the dollar, and it ruined global economies when we printed all that money. Okay. It wasn't that people didn't want to buy in America. They want to. They didn't have the money to do it. And maybe the economy's starting to turn the corner and you're seeing an increase. Okay, maybe foreign buyers are saying the headlines you read that foreigners don't like America isn't all that true. America seems more open for business. And you see an increase there in foreign buyers. Nowhere near the scale that we saw in 12, 13, 14, 15, 16, when everything was on sale, or 17, 18, or 19, but up from last year. The last 3 or 4 years have been down. So this isn't a political thing. It's a reality of how much money is flowing around the system. Remember, if you've got money to spend and what better place to spend it than the U.S.? Okay. Here are the percent share of top 10 countries of origin to foreign buyer purchases. Okay. If we go to last year, China 15%, Canada 14%, Mexico 8%, India 6%, UK 4%, Brazil 3%, Colombia 3%, Nigeria 3%, UAE 3%, and Israel 2%. That 15% for China, the highest level they've been at since 2015, 16%. Moved down, look at over the COVID years, 21, 22, down to 6%. That number is right back up to kind of where China international buyers comfortably were in the years leading up to 2020, right at 15%. High watermark there is the percentage of buyers that are buying in the U.S. Okay, U.S. still remains a desirable place despite what you might read. One of those reasons, really strong job market. Okay, I know everybody's waiting for this number to go down. Department of Labor put out the report this morning, week ending July 12. Initial claims comes in at 221,000. That's a decrease of 7,000. So this economy that's going to blow up, Mark Zandi, well, your red flare might be a little early. The hard data doesn't show it. Obviously, this is one of those, maybe the only thing we have left to count on breaking. Nobody wants it to happen. I'm just saying it's maybe the only thing left if Jerome Powell stays in control to move rates down. Economy, jobs, businesses, mergers, acquisitions, they're holding firm, and the job market has not broke. And there's just not enough pressure because of that for Jerome Powell to make a move, according to Powell, due to tariff concerns. 10-year Treasury, 4.433. It's the high watermark for the last 30 days. 30-year fix yesterday came in at 6.83. Poly market has the cut at no chance, 96%. 12 days, we get the next Fed meeting. See what happens to Jerome Powell between now and then. All right. Thanks again, everybody that came to BAM BBQ. What do we got going on here the rest of this week? We got BAM Camp September 24th. With the walkthrough today going up here on the main channel. If you're not subscribed yet, subscribe now. BAM on YouTube. It's the simple way to support us. If you enjoy the content, if you enjoy the hot sheet, subscribe to the channel. Tomorrow will be a new Knowledge Brokers pod. And today, just a little industry news here for all my real estate agent friends. Today, the president of growth, I'm assuming he's going to show, driving from New York City. It's a decent drive. 95 has a lot of traffic in the summer. But president of growth from Compass will be coming right here in my office, have a one-on-one conversation, which I'm sure we'll post next week. You know what was interesting? Somebody from the team said, what does Byron want to talk? What do you mean? What do I want? You know what I want to talk about? I mean, hello. He knows what we're going to talk about, and I'll be posting that next week. So make sure you subscribe to the channel so you don't miss that alert. Have a great day. We'll see you guys next time. Toodaloo.